Good evening, friends. I think again one more day of a volatile market, and I think market seems to be becoming more and more volatile. We saw that happening in the month of January. Market touch all-time high, and equally sharp correction we saw in the market. And again, and what happened in the month of January continues in the month of February. First 2 days, but it has continued. Today we are going to discuss some interesting trend actually. And I want to, sometimes some trend basically gives an idea how you should basically optimize your portfolio strategy, or how should you basically look at your strategy in a very closed manner. So I'm going to discuss something very, very interesting data. So that's one, number one. Number two, we all talking about the rate of interest going to decline. But if that is so, what's happening in the Indian quarters for the December quarter? Has the interest cost come down or not? Or is it rising? If it's rising, how much danger it poses to the growth in the earnings? And of course, some more. But before I discuss all those future trends, let me put a disclaimer that this webinar is just to enhance your understanding about the equity market. Past performance is no indicator of future returns, and whenever you want to, please consult your financial advisor before buying and selling any stock. Am I right? And investment in securities market are subject to market risk, and hence one should be a little extra careful. Now, if you look at it, there are 5 trends I've actually looked at it, and they are a little diverse in that sense. What I'm talking about, what has been happening in the Nifty advances and declines year by year, and based on that, what kind of growth in the Nifty 50 has happened year-wise. And there's an important message I want to convey. So that data is just one data, but I think there's a big message I want to convey behind that. We all know that Israel-Hamas crisis or fight is creating a problem for the Red Sea. And there are more attacks happening from Houthi side, and US and the UK wants to protect, but somewhere the freight costs have gone up. And if you happen to listen to the commentary from some of the companies from India Inc., they did mention about the freight costs have gone up. So how much has gone up? So I thought let me put that data trend, because eventually that should reflect in the March 2024 numbers. Banks, how the NPAs have performed, and where do they stand in terms of CASA. CASA is nothing but current and savings account deposit. Interest cost, whether it's moving up or moving down for India Inc. And India Inc. is under result season, so who basically contributed most, and how the FMCG companies operating margins have performed in light of the fact that the rural economy continues to remain a little challenge. Unorganized players are eating into some market share. And number 3, the pricing, what we call, is not there. Pricing related, value related growth is not there. So if that case, how FMCG companies have performed for the December quarter. So let me start with the trend in the analysis, in Nifty and advance and declines. Now if you look at it, this is a very interesting data. What this data suggests that how many companies in a year Nifty advance and Nifty decline. All right. So just to get an example, in 2023, 141 days Nifty advance and 119 days it declined. So ratio is 1.2. Market did move up by 20%. If you look at 2021, okay, well, the number of advance and declines are almost similar. and yet market moved up by 24%. If you look at 2010, more decline as compared to advanced number of days, but market went up by 18%. Now this is a very powerful. If you look at the average, is 133 days versus 145 days decline, yet market, the Nifty went up by 318%. What does the data clearly suggest? It is not the trend of the market, but the quantum also matters. So what does this clearly gives an indication? The market normally when it advances much higher as compared to days when it declines. And when you take a net of that, normally market goes up substantially. So despite on an average 133 days advance Nifty since 2010, 145 days on Nifty decline, and yet market gave positive 318%. Now what is the learning there? Learning is very critical. See, always when I come in front of you, I always come with some kind of a message, some kind of a learning that we need to understand that. And there is a reason why we have covered that. Something similar can happen with our portfolio also. Sometimes, we look at कितना कंपनी मेरे पोर्टफोलियो में ऊपर गया, कितना नीचे गया, उससे कोई मायने नहीं रखता. मायने ये रखता है कि what is the quantum of growth that has happened and what is the quantum of decline that has happened. Logically, if you bought a company at X rupees, the maximum loss you can incur is 100%. Why? The price becomes zero and you lost your capital. But gain में ऐसा कोई limit नहीं है. The company which you bought at X can become 3X, it can become 4X, 5X and 6X. And that's where the returns are made on overall portfolio. Remember, sometimes we get little excited about अरे ये कंपनी में मुझे इतना पैसा बना, ये कंपनी में मुझे इतना पैसा बना. What matters ultimately is that what kind of gain that you made in overall portfolio. So even if your company, 3 companies are doing extremely well, out of 10 companies portfolio, 7 are not doing well, there could be a possibility that your 3 companies are doing heavy lifting and is reason for your portfolio in green despite 7 companies are in red. Because the quantum of fall in that 7 companies could be little less and the quantum of profit on those 3 companies could be high, and net you are making money. The reason I have taken Nifty example because I wanted to drive home the point is sometimes we get little perturbed or little concerned. अरे 10 कंपनी से 6 कंपनी नीचे है, 5 कंपनी नीचे है, कोई मायने नहीं था. वो सब कंपनी 5 कंपनी 5-10% नीचे है, but the company, the other 5 companies which is doing extremely well is up by 50-100%, then you are making money. You are making handsome money. Am I right? So, and I must tell you one more thing which has been normally over a longer period of time, gains in the portfolio are function of only few companies. Fine enough in your terms of this one. So what, as an investor, you should look at it is the quantum of gain that company can make, and that's going to change the color of your. So even if you have more losers in your portfolio, only few winners in the portfolio, still you can make money and vice versa. So that's what you need to remember. This message, this data clearly gives an idea. If you would have asked everyone, on an average, since 2010 to 2023, Nifty declined by 133, advance only on 133 days and decline on 145 days, has Nifty gone up or not? And you're only looking at data point would say नीचे ही गया होगा. But the fact of the matter is they've gone up by 318%. Is that clear? So now let's go to the Red Sea crisis pushing up the freight cost, and that has gone up substantially. And I was surprised. Okay, so globally, the freight cost has gone up. If I can see 3411, 10% in last 1 week, 57% as compared to last year. In some places, that is Asia, US, West Coast, 210%. Asia, US Coast, 134%. Asia, North Europe, it has gone up, but just up by 16%, 60, and North Europe to US East Coast, it has declined by 75%. So overall, freight costs have gone up. Now, the reason I'm discussing with you again, those companies which are into import of goods and export of goods, they could see increase in their freight cost. And due to that, there could be an impact on the margin that I'm talking about. So be careful, be aware of that those companies could see their margins getting impacted. And this is not what we call nominal jump. 10% a week, 38% a week is a big number. And in a year, 200 and 134% is also a very, very big number. Of course, it can come down also equally fast. If suppose there is a resolution which has been found, it can come down also equally fast. But today, as I speak to you, I think that's the one concern that we all need to be aware about. And hence, be careful of the company. Those who are into import or export could see their freight cost going up substantially. Bank assets and this one. If you look at the banks, most of the banks have seen improved in their gross non-performing assets. Why I'm talking about, because the RBI time and again has said that there has to be more diligence in it to be applied when it comes to the loans. Why? Because unsecured loans could create a problem for the banking sector. So except two banks, Kotak Mahindra Bank and AU Small, all other banks have seen decline in their non-performing assets, which is a good sign. But if you look at it, December to December, last year to this one, 1.32 to 1.26, so it has gone up. But it doesn't make a sense actually. We should always look at gross NPA from a quarter to quarter. And something similar has happened in net NPA also. AU Small Finance did see some kind of a increase in the net NPA, but overall I think, even I think Ujjivan also saw, so they've also seen increase in their net NPA going from 0.09 to 0.17. But CASA deposit seems to have been a cause of concern for the bank. If you remember, one of the worst performing sector in 2024 is the bank Nifty. And why it's a concern? Because deposits everyone is fighting for the CASA deposits. When I say everyone, literally everyone. Now CASA deposits, current account पे आपको कुछ पैसा देना नहीं है, इंटरेस्ट देना नहीं है बैंक को, और सेविंग्स पे देना है आपको 2.75 to 3%. But bank will never lend you at 3%, am I right? Bank will always lend you minimum 8%. अभी तो 8.4, 8.5 होगा minimum. In other words, your savings are a good tool to increase the net interest margin for the banks, because आपको 3% दे रहा, 3% दे रहा, वही पैसा दूसरे को वो 8% में घुमा रहा है, 5% का उसका क्लियर कट मार्जिन एक्सपांसन हो रहा है. But because of SIP, because of people are aware about money coming into the equity market and so on and so forth, everyone is basically now fighting for that limited pool of CASA deposits. And our sense is that it's going to impact the NIM for the banks. So that's a CASA ratio is a one cause of concern for the banks. Now, if you look at we all talk about, like yesterday, FOMC, not yesterday, day before yesterday, FOMC announced, well, probability of rate cut goes out of the window for the month of March. On 8th Feb, RBI is going to basically declare monetary policy. Probability is very high that it may remain status quo, but before general election, there could be one rate cut. That's what our sense is. But despite no rate cut, interest cost has come down quarter on quarter for India Inc. This this interest cost does not include banks and NBFCs because for them it's a raw material. So we should not compare. We have removed banks and NBFCs from India Inc. It has declined by 1.1%. That's a very good. Of course, Y on Y it has gone up by 10.3%. But you should always look at interest costs on a quarter to quarter basis rather than Y on Y. So I think if RBI eventually, as and when it reduce the interest rate, it should benefit India Inc. And in fact, that could also be, someone was asking me yesterday about the capex cycle. It could also result into a capex from the private sector. So interest costs are coming under control, which is a very happy scenario. See, but as long as it's not increasing, it's fine. Net profit is again down quarter on quarter by 1.1, but year on year it's up by 29.1%. That's a very smart growth that we have seen in the net profit Y on Y. Little decline in net profit 1 on 1 by 1.1%. There is one more thing which I have observed, that many companies, the commentary seems to be quite optimistic. No one is talking about that, हमारा result खराब आएगा जाके, we will see a margin pressure. I think overall the mood seems to be little cautiously optimistic. Election will come, will get announced, and that could put some kind of a slowdown in the infrastructure projects because वो नहीं होगा. That's one. But otherwise, I think we should expect even the March numbers for India Inc. to be little better than what it was there of March 2023. So right now, and who are basically driving the top line and bottom line growth? Banks and private sector, finance, bank public sector, engineering turnkey products, which is very low, and power generation. That's on the sales growth. In terms of bottom line, refiners did extremely Y on Y, not the quarter on quarter. Private sector banks still did extremely well. Bank public sector did well, and power generation supply did very well. Now FMCG companies operating profit margins, and I think, and when I look at the data, I was really impressed, and I thought, let me say this analysis. Now I'm not making I need to do more study, but my sense is that this trend, after looking at this margin, makes me believe that FMCG companies can outperform. Why am I saying so? Just look at this. Almost everyone has either retained the margin or have improved the margin. Am I right? Now this is despite the fact that the rural economy has not done as much as well. This despite the fact that there is a competition coming in from the unorganized. This despite the fact that you don't have a value growth coming in. This despite the fact that volume growth has not been so robust. And yet, either they have been able to improve the margin or have been able to maintain the margin. And one of the reasons seems to be lower input cost really helped them. They did not pass on that input cost to the 100% is not passed on. Otherwise, they would not see that operating profit margin improving. So I think that's one good thing. So I think investors, especially institutional investors, will get excited with the numbers. And some of the companies could become potentially a good buy going forward. So please keep a close watch on the FMCG companies. 10 years yesterday when the budget came, Ms. Nirmala Sitharaman mentioned that our net borrowing, gross borrowings will be also down in FY 2025 versus FY 2024, and our net borrowings would be down. And due to that, there has been some amount of easing on the government. It's going down. Bond yield is coming down, which is a very good sign. And this should help reduce the cost of borrowing for India Inc. So India Inc. did see a quarter on quarter cost of borrowing coming down, and with this 10-year bond yield coming down from 7.3 to 7%, I think will further help not only to reduce the borrowing cost, but also to help revive the capex cycle. So I think very, very good sign. That's a positive trend. and natural rubber prices are going up. It's gone up from one. I would put it 150 rupees, 151 rupees per kg to 164 rupees. The reason I'm discussing this because natural rubber, and there are many other, like cocoa prices also gone up. And if you are going to consume sweets, like chocolates and other things, I think they are going to become more and more costly. It has gone up substantially. The in the tire companies, if 100 rupees is my raw material cost, 35 to 40% accounts by the natural rubber. That's one. But on the other end, the crude derivatives are also there. Now, crude prices will soften somewhat in the last 6 months or so. So, net, it may not be an impact. But I think this is one data we need to keep very close watch on if you are holding any tire companies in your portfolio. And we are closely watching that data very religiously. What is the major news? Next, Sensex and Nifty moved by almost 2.5%, while medium small cap gone up by 3 to 3.5%. Both Fed as well as Bank of Canada decided to take a status quo. RBI is going to do it on 8th Feb, but we'll discuss next week. PMI, manufacturing PMI touched 56.5, 4-month high after December report, 18-month low 54.9. So that's a good. GST collection 1.72 lakh crore, second highest ever collection since the introduction of GST, which is good. And FI sold very heavily in the month of January. Let's open the floor for question answer. Yes, sir. Tell me about metals in 2024. Video labs. When the wars end, many countries and arsenals are to be remade. What needs? We need lot of metals. You are right, sir. I think the metal is also a function of what happens to the China. China did announce some stimulus package. Now that should help metals to do well. On the other end, even though the IMF has revised the global growth upward, it would still be less than what it was there in 2023. So normally, when the world economy expands, demand for metals goes up. When the world economy contracts, demand for metals goes down. And China is a very, very big daddy in this because they almost consume 50% of the global metal. We need to wait and watch. Right now, data doesn't look very, it's a little mixed signal that's coming out. So my suggestion would be, sir, your point is right that we would need a lot of metals when the post-war reconstruction needs to be done. Whether that happens, when the war would end, we don't have any clue right now, am I right? So we need to wait and watch. So right now, metal, one should not take too much exposure at this point of time. There are certain companies, definitely you should take it, but not all companies, because we do believe certain companies have been poised for a very good time kind of a return, but not all metal companies are going to do extremely well in the near future. Syamal is saying, what top three sectors in India? Our sense is that pharma should do extremely well. Our sense is that defense should do extremely well. Our sense is railway should do extremely well. So I think if you keep exposure to these three sectors, I think you should be fine. Another theme that if you wish to play at all, you wish to play is the green energy. And there are certain, because yesterday in the budget, government did focus about green energy, solar panel and so on. So Chinese counterparts and stiff commitment from the Chinese industry, as well as the high input and raw material costs as well Indian paper industry. What makes you bullish on this company? Thanks in advance. So Pranav and Nikhil, I think what is happening is the Chinese companies, the dumping is happening. And Manufacturing Association of Paper Manufacturing Association, they did suggested to the Finance Ministry to put anti-dumping duty. It has not come in the budget, interim budget. That's one. The valuations are very, very good. But I think I was looking at some data. I think the ITC came out with not so great numbers. I think today Andhra paper also came out with not so great numbers. So there seems to be some kind of a margin erosion that is happening. So we are closely looking at those paper companies and we'll take a call what needs to be next course of action on the paper stocks. Frank is saying, Sunil, SBI and ONGC discount, how will it affect investors or also the market? I'm not very sure, sir. SBI and ONGC will be divested. There will be divestment. They are not going to give up the control. And as and when the divestment happens, there is no impact on the market. I don't think one should be little. Only thing SBI and ONGC, the floating stock goes up. As and when that goes up, the scrip normally comes down. Because market does not like more liquidity coming in. Government of India, if it's going to dilute their stake, that means more shares will be available with the investors. That is non-government investors. That increase the floating stock in the market, which normally see a price moving down. But I am not aware about SBI and ONGC divestment is on the card. एक बात बोल दूं, मेरे को नहीं लगता है कि बिफोर जनरल इलेक्शन एनीथिंग इज गोइंग टू मूव इन दैट डायरेक्शन. थोड़ा डाउटफुल लगता है बिकॉज द कंप्लीट मशीनरी विल गो इन द इलेक्शन मोड एंड आई थिंक नो गवर्नमेंट वांट टू डू डिसइन्वेस्टमेंट जस्ट बिफोर द जनरल इलेक्शन. Okay. Raju is saying, will there be a pre-election rally towards 23,000 Nifty? Very difficult to say. But I was looking at some data and I was discussing with someone today. India's GDP would be 300 lakh crore by end of 2024. That is financial year 2020, March 2024. Our market cap is near about 380 lakh crore. So we are little premium. Assume that you want to discount the future and you say, what would be the GDP by March 2025, which would be near 330 lakh crore. And if you look at the market cap to 1 year forward market cap to GDP ratio, still looks very, very expensive in that sense. So can Nifty go to 23,000? There is a momentum. It's very difficult to predict whether it can happen or not. But if at all it happens, I think it's going to increase more risk to the market. That's what my sense is that. So what we have been advising, and we wrote one blog also today saying that, do not expect any pre-election rally. In fact, someone I met today, and he said what, 40,000 crore is sitting on the sideline, either 20,000 crore from the mutual fund and so on and so forth, another 20,000 from HNI, PMS and AIF. They are waiting for the market to correct. So for some reason, if the market is going to correct, they are going to come and pump in the money. If you ask me, probability of 23,000 before pre-election looks little doubtful. It can happen. I'm not saying nothing because in market किसी का बाप का नहीं होता है, वो तो उसके logic से चलता है. Probability is little low that it can happen. So if I have to put a probability out of 100, I would pay maybe 20% probability that it can go towards 23,000. But probability of market remaining range bound or with a downward bias is much higher. And second thing, you said what should be a strategy towards mid cap companies? See, if you look at our PMS strategy right now, and if I combine both our soul and power, we have highest exposure to the mid cap companies, followed by small cap companies, then followed by large cap companies. So we do believe that within the mid-cap space, there is a good scope for a capital appreciation, provided your stock selection is extremely careful. If you happen to get into a wrong company at the rich valuation, you will end up losing money very badly. So my advice would be careful what you are getting into in this market. Okay, I again repeat to many of you, if you have fully invested in the market, please look at the company that you are holding in the portfolio. If you are making decent gain and you believe now the story for which you basically bought that company no longer holds true, please lock in the profit. But that money should not go out of the market. Reinvest that money in another good quality company. And if you are sitting on the sideline, my advice would be, please invest 1/3 today, 1/3 after 2 months, another 1/3 after 2 months. In other words, you would have been fully invested in the 4 months period, because 0, 2 and 4, that's how it's going to work. And irrespective of what happens to the market, you should take this strategy. But never ever take a cash call on the market, because it's extremely difficult to deploy the funds when the sentiment goes down. So 20% probability of 23,000 Nifty, 80% probability that it can remain in the range bound manner with downward bias. Anshul, if you don't mind, could you please share your daily routine? Like, how do you manage your time? So, it's a very funny thing, you know. So, right now is a result season. So, I go for a morning walk. We have a nice podium where I stay, which would be near about 1 kilometer kind of a stump podium, you know. So, I listen to some of this. When I'm out for morning walk, I listen to the con calls of a company which I want to listen to. Then while walking, I walk for about 45 to 50 minutes. Then I will, half an hour, I will do some pranayams. And then I'll catch up on what happened to the international market. So I read some of the foreign publications just to understand what happened to the US market, what happened to the globally, just to catch up on that. Then if time permits, after that, then I'll catch up on some newspaper, Indian newspaper, if time permits. Sometimes it doesn't happen. Then basically I'll take a bath, have breakfast, do some puja, come to the office, and it's a normal routine where meetings are there. Sometimes there are many unscheduled meetings which takes away a lot of time and energy. But then guidance to the team and so on and so forth. We also have now active dealing room in our PMS. So also ensure that that dealing room is basically active and so on and so forth. And then, start making presentation. If I have to make a webinar, I have to do webinar, writing, responding to emails and so on and so forth. So that's how the day goes. Once I'm done with it, I stay very close to where this office is. I'll go have a dinner. We have a family dinner, so everyone would be on the dining table. 1.5 hours, not only will have dinner, but we'll have to catch up on what happened during the day. So the complete family will sit down, we'll discuss. And post that, again, I'll go to my study room. And again, I start catching up on all the newspaper, which I could not catch up in the morning part. And then some catching up on the social media about the news, if something interesting is happening globally on something on. And then basically I wind down by 11:30. That's my normal schedule. So that's what happens to me. And maybe during office hours, I do go out for walk for about 15-20 minutes just to break that monotonous thing. So that's what I do actually. So this is mine. I don't know how it will interest you or not, but that's very boring kind of a schedule that I have. For a change, I'll be going for a movie today at 9. Nimesh is saying, how do you make 100 crore from 5 crore in next 7 to 8 years? So basically you are saying you want to make 20x. Thus, थोड़ा difficult लग रहा है sir, because your CAGR has to be very, very high. Is it possible to PMS or we have to take extra risk? I think, sir, you need to take an extra risk. If someone tells you that I can make your money 20x in 7 to 8 years, तो थोड़ा डिफिकल्ट लग रहा है. I'm not saying it's impossible, थोड़ा डिफिकल्ट लग रहा है बिकॉज योर you need to understand also कि आपका जो CAGR है बहुत ज़्यादा है. And I don't think even if the market does well, so on an average the market will do 15-20%, 15% or so CAGR. Someone is smart also and assume that he makes 100% over the benchmark, तो वो 30% हो गया आपका. Am I right? अभी आपको मैं देखता हूँ, I'm just looking at 8 years, not 7 years, but 8 years. Let's see what is the CAGR works out to. It works out to 45%, sir. थोड़ा difficult है, sir. Very, very difficult है. थोड़ा, okay, so whether it's a PMS, even if you take a risk also, it looks become little difficult. थोड़ा आपका थोड़ा ज़्यादा ambitious हो, sir, निमेश sir. आप थोड़ा drawdown करने का आपका expectation. I'm aggressive sir, for 20-30% drawdown. We are comfortable, mentally prepared. Please have a special session for investor like us. Sir, I can do session like this, but to assume that 5 करोड़ का 100 करोड़ हो जाए 7-8 साल में, थोड़ा डाउटफुल लगता है, बिकॉज कंसिस्टेंटली यू हैव टू हैव 45% kind of a CAGR. In other words, as a portfolio I'm talking about, am I right? That means the whatever company that you're getting into should be a multi-bagger kind of a stuff. Because 45% CAGR बहुत कम कंपनी करती है 7-8 साल कंटिन्यूस के लिए, am I right? Or even if you keep churning the portfolio, then you need to get into a right company at every time. थोड़ा डिफिकल्ट लगता है. So it's a difficult, sir. So my advice to everyone is very simple. The reason I always tell investors, you should be happy if you are able to double your money in 5 years. That means मोटा 15% CAGR आ गया आपका. Anything over and above that, it's a bonus. ऐसा नहीं बोलता हूँ कि नहीं आएगा, वो आएगा. But when you keep expectation low, then life becomes little easy. The moment you keep your expectation a little high, and if it doesn't happen, you will feel unhappy. So my advice would be, sir, please tone down your expectation. Even if some PMS tells you that this is possible, I'll take with tons of salt, not pinch of salt, but tons of salt. It looks little difficult. 45% CAGR, sir, Anna. And after paying all the taxes and other things, looks extremely difficult. Rahul Tyagi, your webinars are full of deep analysis and bring vast knowledge to people like me. I have 2 queries. Thank you, sir, for the compliment. The dividend track of my MM portfolio does not come correct and miss out some of its portion. Under portfolio, mutual funds are not showing since 2 weeks. Is that the stop at your site or some technical? Whenever I click on that, it takes me to the MM default page. Kindly inside. So, sir, Rahul ji, I don't know when you said dividend track of model does not come correct, means, are you saying that sometimes we are not updating our dividend, ex-dividend dates or something? That's what you are saying? If that is so, I'll definitely pass on to Karan, because Karan is the right person to take MarketsMojo question. I'll definitely pass on to him. And even mutual fund portfolio not showing since last 2 weeks. I don't know, sir, why mutual fund portfolio is not showing. Of course, I don't invest in the mutual fund, but let me go to the website now. If I can research order my portfolio, okay. No, it's showing to me, sir. If you can see this, can you just... So I'm clicking on funds and then my portfolio. I hope that's what we are referring to. And when I do that, it's showing me. So, okay, I do have, as a disclosure, just keep it there. So I do have ICICI Pro Nifty IT Index. And the reason I have it because, we were testing the site and we wanted to see whether it goes through or not. So that's what I did on 27 January 2023. That is last year. And it's up by 24.7%. So I think it seems to be a smart move. And of course, this was just a token to test it. I don't invest in mutual fund. Sanjay Gupta, great compliments to you and the Mojo team for a thought-provoking analysis which instills a confidence as to us to remain invested and make the profits in times. Sir, our job is to make each and every retail investors, HNI investors. Unfortunately, Gupta sir, everyone in this market, when I say everyone, almost everyone, never thought of retail investors. Everyone was has a selfish motive and always scheme the retail investors. कोई trading tips दे दिया, derivatives का कोई tips दे दिया. People want to really never thought of, making retail investors educated investors. See, our job is to make everyone educated. And once you educate about the equity market, probability of you taking a wrong decision comes down. You become more matured in your thinking in terms of not getting carried away by the fear, not getting carried away by the greed. You don't get herd mentality. Why? Because दुनिया अभी एक सेक्टर को ले जाए, मुझे भी इसमें लेने दो. These are the things which we want to inculcate in the investors. So once your habit improves, probability of you making money is very, very high. Otherwise, people क्या होता है, I met someone chartered accountant in Abu Dhabi. We addressed the complete, all the CA community of Abu Dhabi, Indian community definitely. And then one investor, one CA clearly admitted to me कि सर मैंने 1993 से पैसा डाला हूँ मार्केट में, अभी तक मेरा पैसा नहीं बना. इंडेक्स जो 1000 था, एंड व्हेन आई वेंट इट वाज अबाउट 60,000, तो ये 60x हो गया था सेंसेक्स, लेकिन मेरा पैसा नहीं बना. एंड ही सेड आई एम अ चार्टर्ड अकाउंटेंट, yet I could not make the money. So I keep telling investors, you don't have to be financial literate. In stock market, you need to be investment literate. Otherwise क्या होगा, फाइनेंशियल लिटरेसी में आपको बाकी सब ज्ञान होगा पर स्टॉक मार्केट ज्ञान नहीं होगा. एंड आई थिंक वन ऑफ द की थिंग्स टू मेक मनी इन द इक्विटी मार्केट, गुप्ता सर, इज दैट डिसिप्लिन एंड द पेशेंस. अगर ये दो कॉम्बिनेशन आपके आ गए ना सर, your probability of losing money from the equity market goes down substantially. And I want to harp on that word substantially. And that's what we are coming and in front of you, advising you, do not panic. See, everyone wants their portfolio to go up every day. Possible nahi hai na sir. The moment you reduce expectation, bola, see, that's why I said, someone asked me, can I make 5 crore ka 100 crore in 7 to 8 years? I said no. The moment you bring down the expectation, then you are more sensible in your approach. But you say, नहीं मुझे करना ही है, then you will take risk which may not be always pay off. And what can happen, that 5 crore can become 2 crore, make whatever 2.5 crore, it can become 0 also. So instead of making money, you lose money. Why? Because you taken many shortcuts to become rich in a rush. So that's whatever we do, and we'll keep doing it, sir, Gupta sir. That's our commitment from our founders also, Mohit and Joyson. We want to educate investors. This is the only, most probably the only website in the country, or maybe in the most probably in the world, where people, someone from our team is always daily come in front of you, pick up your questions, guide you, and try to do hand holding during good time also and during bad time also. Sam Sundar, info you said about history of Mojo stock is excellent. As per regulation, what data about model portfolio as advised by you and your so-called master list can be published regularly? I understand that actual portfolios and their performance will be different, and for various reasons, it is not possible for the investment advisor to take that. It may be possible to create an index of Mojo stock flexi cap index and publish it. So, sir, we publish our Mojo stock list, not only which are there right now with the live performance, but we also showcase what has been there in the past, and when they become a Mojo stock, what price they become, how long they remain a Mojo stock, and when they exited, what kind of gain they made or what kind of loss they made. It's completely available. Model portfolio we cannot give because it's a completely no-no from the regulator side. Why? Because every investors will have a, you came today. So I'll give you a classical example, Sam Sundarji, and I think let me spend a couple of minutes on that. One customer wrote to us, and one of our team member came to me. He said, I'm investing in the equity, your model portfolio since 2021. 3 साल हो गए मेरा पैसा नहीं बना. I was surprised. How can that be possible? No, उसने ऐसा नहीं, मेरा पैसा नहीं बना, it's underperform. Sorry, let me correct that. I was surprised. Let me see how can that be possible. Then I went to the investment history in the model portfolio. Number one, our model portfolio previously we used to assume that you bought at certain price. Now, investors had an option to add and so on and so forth. Am I right? This investor was making continuously 7 to 15 days delay in terms of executing the trade. Number one. Number two, every month since 2021, he has been adding money to the model portfolio. And most of the fund that came, so for example, he's invested in 2021 1 lakh. Now he's investing 3, 4, 4 lakhs every month or always quarter kind of a stuff. Now, how can you say that वो 2021 से चल रहा है? Because you will keep adding money. Now, how do I showcase that performance? One guy would not have invested a single rupee on that particular day when he started model portfolio. Someone would have put some money, someone would have put more than one time, so on and so forth. It becomes how do we publish that kind of data? And as far as you are concerned, Sam Sundar, you said Is it possible to create an index of Mojo stocks? Sir, you can create and you can see it basically. We give all the data which helps investors to take a very informed decision. Which are the Mojo stocks are there? We give also market cap wise, large cap, mid cap, small cap, micro cap. You pick and choose which one, because then someone will say you are basically आपने फ्लैक्सी कैप बना दिया, पर आपकी कंफर्ट लेवल से बनाया, कितना आपको लार्ज कैप पे डालना था, कितना मिड कैप पे डालना. We'll all go into that kind of a, because what is the mix of that flexi cap? Would you put 30% in small cap? Would you put 10% in small cap? Would you put 40% in small cap? And so on and so forth. We said we give you this data in very open manner to everyone. आपको जो कुछ एनालिसिस पे करना है आप कर लीजिए. We are very happy with that. We are not basically saying it. The very fact that I don't think how many websites have a courage to display the complete list. People will only showcase where they've gone right. They will not showcase where they've gone wrong. We don't do that. We don't pick and choose what we want to show on the site. We show what is there on the site, all, whether right or wrong. And you people can judge how good or bad. The reason why MarketsMojo has been thriving years after years, because of the transparency, because of the kind of wealth investors could create using the platform. And this tribe is increasing. I'll give you a classical example. I met someone in Chennai. This gentleman is a MarketsMojo subscriber. And he met Mohit also, because we both were traveling together, and he met Mohit also. And he came to us and he said, साहब मैंने मिनिमम 200 सब्सक्रिप्शन लिए होंगे MarketsMojo के. तो बोला 200 सब्सक्रिप्शन लेके क्या करना है? Because normally our subscription are for 2 years minimum, am I right? तो 200 का तो 400 साल हो गए वो तो. बोलते नहीं सर, मैंने ये नहीं कर रहा हूँ. Whenever I want to give someone a gift, I give MarketsMojo subscription. ऐसे मैंने 200 गिफ्ट दे चुका हूँ MarketsMojo subscription. Why someone would do that? Purely because he used the platform, he got benefited out of that, and the same benefit he wants to pass on to some of the well-wishers of his, and that's what he did actually. So that's the kind of stuff, Sir Sam Sundarji, we do. We are transparent, we are honest, and we display in black and white. There is no shade of grey in our information. Vinayak saying there are 400 plus PMS in India. How to choose among them, especially when it is the said that performance is not indicator of future performance. So Vinayak ji, let me tell you how I would do it. Okay, I need to first buy into the investment philosophy of that fund manager, and that's where your philosophy and the PMS fund manager philosophy should align. And once that is aligned, then your job becomes easy to then pick and choose. You are right, 400 है PMS fund manager India में. I can always say हमारे PMS में आ जाओ. But that's a little biased statement, because I run the PMS, so that's a little biased. So first you need to believe in the investment philosophy. Is the fund manager honest? Is the PMS company honest? Are they transparent? Are they doing own handling of the customers? Are they resolving all the complaints? If they have doubt, are they doing that? Because ultimately it's a service also, am I right? And if even the performance is good but service is poor, would you like to stick with that? Answer is no. Will you go to a restaurant where the food quality is good but the service is poor? You suppose मेरा experience तो अच्छा नहीं रहा, because service इतनी घटिया थी कि खाने का मजा ही चला गया. So I think it's a combination of this one. So I think you need to first understand the philosophy of the fund manager, and do you then subscribe to that philosophy of fund manager or not? And once that is done, I think the 80% of the job is done, and then you need to look at the honesty, transparency, what is the track record, and so on and so forth. Oh, Vikram Singh, why there are no potential renewable energy, particularly Mojo list? Some renewable energy companies have already grown 5x in the last 1 year. I agree with you, sir. It's not necessary that we'll be able to catch up all multi-bagger through our platform. Sometimes we are successful, sometimes we are not successful. I admit that. We don't say that each and every multi-bagger will be a Mojo stock in our system. We don't claim that. But what we know, that the green energy has a very, very bright future. And see, don't get confused with only with those who are into renewable energy. The complete ecosystem has to be created, am I right? And that's what Ms. Nirmala Sitharaman yesterday also said. There are many good quality companies that we do own in our PMS portfolio, which are the part of the ecosystem. And they could basically be the beneficiary of this complete boom in the green energy, because Government of India is going to spend a huge amount in terms of that. 1 crore houses will have a solar system is a great thing, in fact. And the way it has been explained that if you generate 300 units, you consume less, so then balance you can give it to the grid and you can earn money also. Now see the impact of that. So people don't realize there's another impact which I forgot to mention in my webinar yesterday. Suppose you are able to generate 300 units through the solar. And I'll give you my classical example. My brother-in-law lives in Surat and he has installed on his bungalow the solar system. Previously used to make payment to the Surat Electricity Board. I think that's a torrent is there if my memory serves me right. Okay. Now he receives money from the torrent because credit mil jata hai, because he is able to consume more than. Now what happens? Now think from the budgeting point of view as a household budget. Previously I used to, I'm just giving an example, okay, 1,000 rupees every month I would used to spend on my electricity bill. वो तो बंद हो गया. शायद मुझे 100-200 रुपया आने लगा. It increases my purchasing power to use some other goods and services. And when I'm able to do that, it will spur the growth in the economy, because I have a more disposable income in my hands, which will spur, it will call for more demand for goods and services. And I think that's going to happen. So my sense is that this is a very brilliant move. Same way EV needs a charging. There will be someone basically would come, the complete ecosystem around the EV. See, remember, EV is the future, whether we like it or not. It may be a little slow right now, but that's the future. Because everyone is going to come out with so I've not heard a single automobile company in India or globally who says that we will stick with IC engine only. Even Maruti is going to come out with EV. And yesterday or today I saw somewhere they came out with that model which is going to get displayed. I think it's getting displayed in the Bharat Mobility. आज जो Prime Minister गए थे वहाँ पे वो display भी किया है Suzuki ने, Maruti Suzuki ने. So everyone is going to come up with the electrical vehicles, and due to that there is a huge opportunity that's going to come up. The solar, electrical vehicle, wind, and so on and so forth. I think it's a good future. So yes, we may not been able to invest in the renewable energy company, but we are also playing out with the ecosystem that's going to provide the ecosystem. That's another way we are playing out on the renewable energy front. Prasad is saying, I fully agree with you that the investors should look at the overall performance rather than look at the individual shares. However, shouldn't your IP look at the continuously underperforming shares and get out of it? Would not this significantly contribute to the overall performance portfolio? Sir, definitely we look at our IP looks at each and every company continuously, and if there is underperforming, we do get out of that. Who said we don't get out of that? Today also we got out of one company in PMS I'm talking about, which has not done well, and we got out of that. We booked the losses also. We did that in model portfolio also many times. Am I right? We did that with stock of the month also. So we do keep doing that, because see the reason, and in fact there's someone who came down to our office and he was suggesting that one PMS fund manager. He said, sir, वो पैसा क्यों नहीं बना रहा है? बोलता उसका ह्यूमन बायस है, वो कंपनी को लेके बैठा रहा है. Am I right? तो वहाँ पे उसका he doesn't have a guts to book losses. He's in an internal hope that एक दिन ये कंपनी मुझे पैसा बना के जाएगी. In our IP, the human emotions got out. So if the company is underperforming, our IP says it's going to underperform further also. We get out of that company without any human bias. And you are right. The moment that's why I keep saying this word, Peter Lynch ka. Water the flowers, cut the weeds. What is weeds? Weeds are nothing but the underperforming company. The moment you get out of that company and you reinvest that money into a company that's going to perform well, it will add to your overall portfolio performance. And I keep saying that, see, this kind of a, and there's small thing, when you look at over a longer period of time, it adds substantially to the overall portfolio returns, which people don't realize. The small gain that you're able to make getting out of an underperforming company and reinvesting that money where the company is likely to outperform does a lot of good to your overall portfolio returns. Can we play Prafulgala momentum strategy in PMS or take some exposure to give some boost to our returns? Some of the PSU other stocks have given handsome returns. I understand some of these stocks can go either way, but anyway, PMS is the high risk strategy. You're right, Prafulgala sir. We have two strategy. Soul is a high risk, high return. Power is a medium risk, high return strategy. You can definitely take some exposure to our PMS and see how good it is doing. I'm happy to inform you in the month of January, while the overall market was little lackluster, our strategy did extremely well. And next Thursday, because normally we display our performance to our PMS customer first Thursday of every month. But this time happened to be a budget day and had to basically postpone that webinar for the next Thursday. So I'll go into Pleasant and you will see that how good that strategy has worked despite the markets going nowhere, because January was very choppy market, isn't it? But we did extremely well. So yes, you please do take exposure. My suggestion would be don't put all money in one basket. Hence I am not suggesting आपका जितना पैसा है सब हमारी PMS strategy में डाल दो. You have to do proper assets allocation. But it's worth taking a exposure to PMS, because I can tell you with confidence, we are very confident in 3 to 5 years period. If you don't need the money for next 3 to 5 years, our PMS should outperform significantly to the benchmark. And I want to harp on the word significantly. Purely because of our IP, we are very confident it will outperform significantly to the benchmark. Yes, it can underperform for a shorter period, but 3 to 5 years it will significantly outperform. Last two questions, if you don't mind. I noticed that markets was moved out of India. Did MarketsMojo lost faith in India? So who told you that MarketsMojo has gone out of India? I am here sitting in front of you. MarketsMojo office which was there is there. Everyone is moved because we have also expansion internationally, but not at the cost of India. Muhammad Tahir, what is your next prediction about FI coming back? Earlier used to predict that inflow outflow funds about every month. So Tahir sir, we predicted that in our equity outlook 2024, loud and clear, that FI inflow in 2024 will get moderated. We should not expect the kind of inflow that we saw in 2023. So it's going to get moderated. There will be some months which will be positive, there will be some months which will be negative, and overall कुछ बड़ा पैसा नहीं आएगा FI से 2024 में. Monthly, I don't think I've not done. Maybe one or twice I must have done it. But normally I don't predict FI ka every month what's going to happen. Neither I'm an expert nor have a capability. आमिर के पास बहुत सवाल लगते हैं आज. मेरे को मूवी देखने जाना है भाई आज. For a change. It's very close by. It's not that I have to go a little far, but I have to have my meal also before I go, because the family is already waiting for me. They did call me. I could not pick up the call. Let's take one more question, Amir, since you have been. Which sector you had highest exposure in PMS? We would have, as of today, because see, we keep locking into profits very significantly. So we don't basically. So I think we should have IT software. That's what my sense as we speak gives me, that we would have highest exposure to this one. We do have exposure to pharma. We do have exposure to some of the auto ancillary companies. That could be another this one. That's what the sector that we have a lot of exposure. So I think Amir is not saying no. He wants to pick up more and more questions. I don't know. He wants me to miss the starting of movie. Amir, chalo, last one more question. Chalo, let's for a change. Again, I have an investment committee waiting for me, so I have to do the process. Basically, after some good safety scores, some companies going down. Some bad safety score companies going up. Any relation? There could be exception, ma'am, but not every time it happens. Yes, it can happen in some companies, but that's the way, we don't say that 100% there will be correlation. There is nothing called 100% short in the financial world. So in some cases, yes, what you are saying could be right, but most of the cases what we have observed that when the CFT goes up, the price goes up. When the CFT comes down, the price do come down. So with this, thanks a lot everyone taking time out. I know the members are waiting for me, and then I have to go out for a movie. So that's the reason. Please excuse me. Again, I'll be in front of you on Tuesday with Q&A. If I have not been able to pick up your question today, please put those questions on Tuesday webinar. I'll be more than happy to answer those. With this, have a great weekend.